Remember 2020? Lockdowns canceled plans, and suddenly everyone dusting off their old Pokémon and sports cards? Cards worth $3 suddenly became worth thousands overnight, and some even hit seven figures. That moment sparked what's come to be known as the COVID card boom, a period where collecting went from hobby to headline. Pokémon cards were selling for 1,000% plus gains. Sports rookies hit seven-figure sales. Casual collectors turned profits that rivaled stock returns. But now it's 2026, the boom is past, markets have cooled, and people are asking the real question: what parts of the trading card market are still profitable today? And which ones are just leftover hype? Today we're breaking it all down: the winners, the losers, the trends shaping the market, and where to focus if you're looking for real returns in 2026. Let's go. The COVID boom explained. Let's rewind to the moment when a dusty binder could make you rich almost overnight. In the early 2020s, the world went into lockdown and people rediscovered old collections. Suddenly, everyone was watching pack-opening videos. Celebrities flaunted rare cards on social media. Auctions made headlines with multi-million-dollar sales. Pokémon alone saw a massive surge, delivering astronomical returns over the long term, with analytics firm CardLadder pointing out returns up to 3,821% since 2004, vastly outpacing traditional investments like the S&P 500. That's like turning $100 into $3,800 without touching a stock market chart. Meanwhile, sports cards from legends like LeBron, Michael Jordan, and Honus Wagner were selling for prices few thought possible. This collectibles mania didn't just spike values temporarily, it attracted new generations of buyers who previously never cared about cards. Market correction in 2025 to 2026. Reality. But like all bubbles, the COVID card boom eventually saw a correction. And this is where the hype crashed. But not everything fell. Some cards survived like rare treasures. After prices surged during 2020 to 2022, many mid-tier modern cards saw their values drop significantly when the bubble burst in late 2023. Here's what changed. Modern mass-produced cards lost value. Cards printed in huge quantities, especially modern inserts and parallels, lost ground as supply flooded the market, and speculative buyers pulled back. But graded vintage and high-grade cards remained strong. By contrast, rare and historically significant cards, especially those graded by PSA, Beckett, or SGC, held up much better. Collector behavior evolved. People stopped buying everything just because prices were rising. Today, collectors are more selective, and that's important for understanding what's still profitable. What still pays in 2026? Here's where smart collectors are still making money, and where casual buyers are losing it. Not all segments of the market recovered, but several core areas are still profitable. Vintage and iconic cards, pre-2000 Pokémon and classic sports. These are the rarest cards with deep historical significance. Examples include base set Charizard, Pikachu Illustrator, Honus Wagner. T206, think about it, cards you ignored as a kid are now worth more than your first car. These categories have stood the test of time and market shifts, and are often the biggest winners in the post-boom era. Even recent auctions continue to demonstrate this. Rare Pokémon cards, originally worth pocket change in the 90s, now sell for thousands or more, and sealed vintage products still pull interest at major auctions. This niche is considered the closest thing to a safe card investment. High-grade blue-chip sports rookies, cards of iconic athletes especially graded near mint or gem mint, continue to outperform. Michael Jordan. Autograph cards sold over £646,000 in 2026. LeBron James rookie tops seven figures in previous seasons. Cards tied to undeniable legends and historically significant athletes are still among the best bets for collector investors. TCG trading card game. Classics, Pokémon, and Magic, trading card games remain central to high value. Even in 2026, ultra-rare Pokémon cards are breaking records. Magic the Gathering classics like Black Lotus continue to command premium prices because their supply is fixed and scarcity is proven. TCG markets are not dead, they've just matured. The boom's hype has faded, but genuine rarity still trades strongly. Rookie autographs and breakout stars. Players with rapidly growing popularity like Victor Wembanyama have seen their signed cards fetch unexpected premiums, especially when combined with distinctive elements like his signature alien doodle. This shows modern memorabilia still has life, especially when cultural relevance and athletic performance align. Categories that lost value after the boom. While some segments are thriving, several bubble-era favorites did not hold their value. Modern mass-produced inserts and hype sets. These cards were printed in huge quantities during the boom, and when the market cooled, their prices collapsed under oversupply and low long-term demand. Lesson? Not every shiny card is a golden ticket, and hype can disappear overnight. Overhyped modern rookies. Not every rookie card is a winner. Only those with true long-term cultural or athletic value maintain profitability. Modern rookies without ongoing relevance tend to stagnate. Overproduced TCG print runs. Even in Pokémon and Magic, sets with massive print runs or no real scarcity generally don't appreciate. But collectors now favor sealed vintage, limited promos, and graded rarities. The broader market today, growth trends and future potential. The boom might be over, but opportunity is still alive for those who know where to look. Despite correction and normalization, the trading card market remains a legitimate economic force. Sports cards are part of a market expected to grow toward $24.7 billion by 2033, showing long-term strength. Vintage and graded collectibles have shown resilience even after market pullbacks, often outperforming unstable modern cards. There's also a growing digital collectible scene, with platforms integrating blockchain and NFTs to attract younger buyers, expanding demand beyond physical cards. Collector behavior has matured, fewer speculative buyers, more strategic ones, meaning value is increasingly tied to scarcity and cultural importance rather than hype alone. But if you want profit in 2026, here's how to approach it. So what separates profitable collectors from hobbyists who lose money? Hint, it's not luck. It's a combination of scarcity, culture, and strategy. Here are the key rules people follow now. Focus on proven rarity. Vintage sealed boosters, first edition cards, iconic rookies, and graded gems are still the heart of value. They'll always get cards professionally graded. Cards graded, PSA 10 or Beckett BGS 9.5 plus consistently outperform ungraded copies. Demand comes from culture. Cards tied to pop culture like Pokémon or breakout stars often hold stronger than generic sports cards. Long-term thinking pays. Short-term speculation rarely wins. The cards that outperform are usually tied to decades-long demand trends rather than short internet hype. So here's the real takeaway in 2026. Some cards from the COVID boom are still profitable. Vintage, rare, and highly graded cards, rock solid. Modern, oversaturated sets, risky, often losing money. True long-term success equals scarcity plus history plus cultural relevance. But now it's your turn. Do you think trading cards will still be a smart investment in 2030? Are Pokémon classics more reliable than sports cards? Drop your thoughts in the comments. And let's debate and see who's right when the future hits. And here's a challenge. If you had $50,000 to spend today, would you buy a vintage Pokémon, a sports rookie, or sit on the sidelines? Comment your strategy. And if you want more deep dives into collectibles, market trends, and hidden gems, smash that subscribe and hit the bell. Because the next collectible story might just be the one that changes everything. Let's make the collectibles world go viral together.